Ekta, thank you so much. I'm looking at the metal prices right now because the markets are reacting to all the data that has been coming in from the global markets. We are reacting to the U.S. inflation numbers that came in yesterday, and then markets are awaiting the Powell testimony to Congress today and tomorrow. And, even as the U.S. dollar is trading at a 3-month highs, we've seen the gold prices continue to hold well above $1,800 per ounce. The pressure, though, clearly has been seen for the base metal prices. But what is the sense from here on? For that conversation, I am joined by Peter McGuire from Exim Australia. Peter, hi, thank you for joining us. Let's start with gold first. And while it's holding 1800, it isn't really breaking up and above there. But the good point is that even as the dollar is strong, gold is holding on its own. What is your sense from here? Will the inflation numbers support buying from here on?
Well, good morning, Manisha. I should say good afternoon. Yeah, at 1813, it's been bid up strongly considering where the US dollar index is, approaching that 92.7 handle. So the gold market, since really the start of the month, has been fairly one-way traffic. I'm pretty sure that, those inflation numbers, I don't know whether they'll surprise anyone, Manisha, but a lot of smart money is moving into the asset class of precious, and I think it's the lead up to Christmas could be, I'm not saying exciting, but I think it'll be stronger than where it is at the moment.
I know, Peter, nobody's really talking about 2,000 kind of levels mark, now. But what is your sense on where would we be by Christmas or by end of this year when it comes to gold?
Well, I'm worried about the inflation numbers. I'm worried about lockdowns if they are reintroduced across Europe and America. We've currently got one in Sydney, Manisha. So where I think those moving parts need to be considered, the inflation story as well, what happens with equities, but I think it's got to be an 1850 to 1900 handle, and I'm not sure whether you're still going to see an interest rate rise in New Zealand by November. So again, what happens with taper, what happens is pulling it off the table. All that needs to be considered, but I really think that gold will trend higher from where it is at the moment.
And what's your sense on the US dollar? Because we've seen strength on that, and this year it still is trading in the positive, much better than what the EM currencies have done.
Absolutely. Maybe a 93 handle for that US dollar index. I'm conscious as far as, you're going to have the divergence between the currencies, or naturally the economies that start to ratchet up rates, being New Zealand will be the first cab off the rank, and then you'll look at the likes of US, Canada, and where does that position itself as far as US dollar versus the other ones will be the laggards being, Swiss franc, Japanese yen, and of course, the euro. So I think the US dollar is going to be stronger. Currencies are a good place to play, and that I think will all be where the next probably 6 to 12 months take us.
Sure. I want to also get your sense on the base metal prices, because even as the China trade data that yesterday for the month of June came in positive, and the export numbers are definitely better, 12 straight month of growth shown in exports there. But when you look at the imports data and the metal imports into China, well, that's a bit of a dismal picture there, whether it has been copper imports or iron ore imports for that matter. How do you read those numbers?
Well, yeah, they weren't overwhelming in any sense, Manisha, so they're a little underwhelming, and that's really a concern. Also, I'm conscious of the big picture as far as what China's doing with its commercial banks to make things a little bit easier. So the downside of that is, whilst you've got that GDP number coming out tomorrow from China, we're sure we're looking at about an 8.1, but the reality of the matter is it's a little bit slower than we expected with those PMIs for June. So I'm not suggesting that we're going to see a very strong 6 months till the end of the year for China. I think it'll just chug along, but it could be a bit of a tough time in the sense if those cards come home to roost for all that debt-driven economy that China's very famous for.
On one side, we've seen the Chinese manufacturing numbers not do so well. And as you also mentioned, there could be a bit of a slowdown. But on the other side, with the RRR cut that China has put out from 15th of July, that would bring extra liquidity into the markets. Would that convert into buying into metals yet again? What is your sense on from how is the second half of this year going to be for base metals?
Well, you've got to also, and I take that on board, but I'm also curious to know how, that southern China region, with the lockdowns, Manisha, and all of that consideration, there is that always a concern too from supply chains and all across that southern China, to the manufacturing hub. So we've just got to get through the lockdowns. We've got to get through where COVID plays. And again, there are many components of this that need to be analysed, reviewed, and then, taken on board what impact it has to a demand picture for base metals.